My apologies, y'all.
Okay, now
I got to hit the unmute button.
Can you guys hear us okay?
Now we can hear you now. Can you start over, please? Thank you.
Sure, no problem. So we work with realtors, investors, and buyers, and we work with buyers who can't qualify for traditional financing. So that could be a number of reasons. It could be foreign nationals, self-employed, bad credit, no credit, I-10, bankruptcies. There's really a number of situations, but we can pretty much get anybody pre-approved within 24 hours or less with very minimal requirements, which we'll go over in the next few slides. Your buyers, once they're pre-approved, will be able to choose any home that they want in the state of Texas. At this time, we are just in the state of Texas, but looking to expand to other states. So any house that they want, once they're pre-approved, they can go out shopping for it. We do not raise the purchase price of the house. Whatever you guys negotiate on the contract for them is what follows through all the way through their closing. And also they get the deeds the day that they close. We record within 30 days and the property is theirs the day that they close. So no rental agreements or anything like that.
So there's really just 3 pre-approval requirements that we have. Number 1 is proof of funds, and that is dependent upon the purchase price, which we'll go into more example for you on that. And then number 2, a valid ID or passport, and that can be from any country. And then number 3 is just the owner finance company application. It's just a 3-page application. We can email that. We also have it available on our website in Spanish and English. It's just the ownerfinancecompany.com under the applications tab. The first page will just be general information. Page 2 goes over all of our rates, terms, and requirements. And then page 3 is an overview of the buyer's process. So our application is a really great starting point as well for you or any realtors or any buyers just wanting to learn a little bit more about the company and needing a starting place. Our application is a great place. So once you have these 3 things, we can pre-approve you within 24 hours, usually within the same day. For the proof of funds, our general criteria is 200 to 350,000, and for that we would require 23%. So that 23%, we'll get into the breakdown of what that covers. And then anything above or below the 200 to 350,000 is just an additional 5%, which would be the 28%. The funds for pre-approval do not have to be seasoned or sourced. We do accept cash and gifted funds with a letter available as well. So we're very creative financing company. So basically, current proof of funds is what we need.
So our terms, rate, and fees, this is how they break down. We recently had an increase in our interest rate for the first 2.5 years of our company. We were at 9.9. When the feds raised their rate, we did go up to 10.5. We are working on the back end for different types of financing, so we can maybe bring that a little bit back down. So for right now, it is 10.5, that's 30-year fixed, and our fees, loan origination charge is 5% of the purchase price. We do not have any prepayment penalties, but we really encourage you guys, if you're working with buyers who plan to refinance early, just to let us know. We do on our side of the lending, when we're purchasing the homes, we may incur prepayment penalties. So it's important that we can buy those prepayment penalties down to that 1 or 2 year. So we just ask that if you know they're planning to refinance, that you let us know so that we can make sure that we pair them with the right investor so that it's a win-win for all parties.
So what are the funds needed to qualify? The amount of funds, again, is just going to be that 23 to 28% based off the purchase price. So for homes between 200 to 350,000, it's going to be 23% that they need for their proof of funds. And what that breakdown, here's an example for what that breakdown looks like. So 15% will go toward the down payment. So they'll be obtaining an 85% loan with us, putting 15% down. 5% is the owner finance company fees, loan origination, and then we estimate 3% for closing costs. The only part of that will change when we get down to closing and the final numbers is that estimated closing costs. The down payment we don't change, the 5% loan origination doesn't change. The 3% estimated closing costs, it'll mirror the same as any traditional lending. We don't get those final numbers until 3 days or sometimes 1 day with private funds before the loan closes. So That 3% is just an estimation that we do for closing costs for purposes of the proof of funds. So for a $200,000 to $350,000 house, it'll be 23% needed for proof of funds. And then anything below or above that will just be an additional 5%, making it the 28. We do not go below 150,000. So really just 150 to 200 would be 28, and then 350 and above would be that 28%. We don't have a cap on anything, but that's just basically the general criteria for, making sure that your buyers and clients have the percentage needed for the proof of funds. You can just do a quick, easy multiplication of either the 23 or 28%.
So we were offering a promotion in April. This is just an example. We do this on and off throughout the year. We do 10% down instead of the 15% down. This is just an example of what we were doing in April. This is not current, but wanted you guys to know we do offer these promotions on and off throughout the year. So looking at that same example, if we were doing that promotion, their total proof of funds would be the 36,000, so 18%. So sometimes it goes lower than the 23, but generally speaking, it is the 23. And right now it currently is, but we do promotions on and off throughout the year.
And then we'll get into the buyer's process, and the same process is also what's listed on page 3 of our owner finance company application. So pre-approval, we can get that done within 24 to 48 hours once we have received the application, proof of funds, and the valid ID or passport. If they fill out the application online, what we'll do is receive that. We will send them an email. We always copy the realtors on everything, just saying, hi, we received your application. Next steps would be submitting your proof of funds and valid ID or passport. You can respond to this email. And that's typically how we just initiate contact with them once we receive the applications online. Once we receive those 3 items, we can then move forward with a pre-approval letter for them, and they can begin searching with you guys for their home. Once you guys put in an offer on the home, the way that you'll do it, you'll write up the contract with them as the buyer. Once you guys do that and have a fully executed contract, then you will bring us the contract. Once we receive that contract, the buyer will have to provide a $5,000 non-refundable deposit with us. That does go toward all of their closing and all of their fees. But we take that right in the beginning when we accept the executed contract. Once we do receive that $5,000 and that executed contract, we will then turn around and assign that deal to one of our pre-approved investors. All of our investors do have to be pre-approved with a lender. We don't let them participate in our program, unless they're pre-approved and ready to go for all of those deals to accept.
Hey, Valerie.
Yes, ma'am.
We do have a question in the chat. Alana, you want to go ahead and ask your question?
Hi, sure. I'm asking, why is the interest so high?
1 second, we can't hear you. She's raising the volume.
Go ahead, Alana.
Why is the interest, you said it was 10 point some %. Why is it so high?
The interest rate you're asking, you said it was 10.5% and what?
Why is it so high?
Oh, why is it so high? So the interest rates that we have there, we work with an RMLO, and the RMLO basically for higher risk, a lot of our buyers, if you're comparing to traditional financing, they're considered higher risk buyers. For us, we don't consider buyers high risk, but when you're comparing to traditional financing, it is considered high risk. So that's why those interest rates are so high, because we are technically considered working with higher risk clients. We have a higher interest rate, and that's also why we have a higher down payment. Since we're only pre-approving off of proof of funds and a valid ID or passport from any country, that's what makes it be considered a higher risk client. And so because of that, we have a higher interest rate, and we also have a higher down payment and a higher loan origination than some other companies out there that would be considered traditional. Our RMLO that we work with, they do stay in line. We have to work with an RMLO, which we'll get into that with you guys, but we work with an RMLO on every file to protect our buyers and us and they do stay compliant. We do have to stay within range of interest rates to stay compliant for the federal level. As the Fed raises interest rates, we also can raise interest rates. We don't always, like Jen was saying, we just did for the very first time this past week, but we don't always. We kind of try and balance that out, on the back end of our side. But as rates continue to rise, that is something that we may have to do moving forward. But yes, generally, just to answer your question, we just have higher interest rates since we're working with clients who don't have to submit as much information to qualify for the loan.
Got it. So essentially, a bank statement is all you would need. You wouldn't have to have credit. It's the payoff for not having to work on your credit, raise your credit, XYZ.
They don't have to provide, tax returns. Their bank statements just have to be current, so they don't have to be seasoned. We also accept cash. Gifted funds are also accepted. So it's helping them avoid the traditional underwriting route, which can, sometimes be hard for buyers who can't provide a lot of that information, especially for foreign nationals and people who don't put their money in banks. We're just an alternate financing option for them.
Yeah, we do also work with a lot of I-10 buyers as well. So, that's another client that typically has a difficult time doing anything traditional.
Yeah. Oh, Val, I have a question.
Yes.
Well, that's not really a question. Just to make you aware, some of our agents are brand spanking new,
Okay.
and they may not know what an RMLO.
We'll get into that. It's on our, thank you for that. So yes, we will definitely get into that for you guys on the next slide. Okay, so I think I left off assigning. So once we assign the deal to an investor, basically the way that we'll facilitate that, we do it one of three ways. Either an assignment contract, which is just a one-page assignment contract that we have. The only people that need to sign that are the buyers, which are your clients, and then our investor. Then we submit that to the lender. Another way we can facilitate is a name change amendment, which is basically just an amendment to the original contract, changing the name of your buyer to our investor. The third way that we can do is just writing up an entire new contract. If the seller prefers that, we can do that. We work with a lot of new builds, and new builds will always require a whole new contract to be completely written up. So it just depends typically which way we go, depending on what underlying lender we're using. For traditional routes, it usually has to be a name change amendment or a new contract. If we're doing it through an LLC or private funds, it's just the one-page assignment. That one is obviously the easiest. So we try to do that whenever possible, but it'll be one of those three ways that we can assign the contract to be able to open file with our lender.
Do you find challenges maybe with the new bills? Because I'm assuming with that initial contract, you're putting up some kind of earnest money. If you go back to them and now they want a new contract, are they requiring additional earnest money?
We usually know if the buyers are working with a new build, and so we let the realtors know if it is a new build, let us know, and they can do their deposit first, and then we will put our name or an investor's name on the contract from the get-go.
Yeah.
Because the builders, it can sometimes take up to 2 weeks for it to go through their system. Management has to approve it, delete it, and then write a new one. So for new builds, if we know they're looking at them, we always just have them do the deposit first.
Yeah, we do. And new builds have been fine to work with. We've done a lot of them, and their sales team, which is who we usually work with in the beginning, is really easy. So we haven't seen issues with that for the most part. And our investors also, if we do have to do a new contract or write anything up, they're ready. They know what the process is. They're willing to put down their earnest money right away. So there's not issues with that either, putting down new earnest money if we need to.
Okay, sweet.
And in that case, your buyers would either bring us the earnest money, or, we just wouldn't credit them on their closing disclosure. They would be a chargeback for them. So we can do it a couple of different ways.
Okay.
Another thing for you guys that can be easy is when you're writing up the TREC contracts with your buyers on there, if you put on there and or assigns in the buyer section, that makes that actual contract assignable. So instead of doing just the one-page assignment contract or whatnot, we can actually assign that contract as well. That's something new that like title companies have been requesting more, not necessarily our lenders, but just title companies have been wanting to see more since those new laws passed back in January. So that's another thing that you guys can do if you like when you're writing up the contract.
So we'll continue through the buyer's process. So as we or our investors, because we do keep a lot of deals in-house. So as we or our investors are going through our underwriting process, our loan process, your buyers will also be going through the same process with our RMLO, which is a residential mortgage loan originator. So we've always had one since we started the company, and she's been with us. Texas Pride Lending is their name. But since January, there was a Senate 43 bill that passed that actually requires that any wrap mortgages have an RMLO on them. So it is in the best interest of your client. It protects the buyer. It gives us and the buyer a full package of realizing whether or not they're going to be able to pay that loan back. So if they can't pay that loan back and, we still are lending to them, that's not something that we want to put them in that situation. So we allow them to add co-borrowers, like there's ways to work around it. We will always move forward with them, but it does give us a good glimpse and let them know, hey, it doesn't look like you're going to be able to afford this, and so it does help protect your buyers. So that's why we go through it, and it is required by the state of Texas to stay compliant. So we will open title as soon as we get that executed contract and their $5K deposit. We will open title, and the financing process will take place with our lender. We do use, like Valerie was stating, traditional lenders. We also work with a lot of private funds. We have different lines of credit. So there's different ways that we'll be purchasing the house, but we will take care of getting all of the insurance quotes. Our insurance company will reach out to your buyers. We work with Goosehead, and they've already identified carriers who are fine with the owner financing arrangement. So in the event of a claim, your buyers can call in, the policies in their name. The carrier's fine with the owner financing arrangement. So they'll reach out during the loan process and give them quotes and work with them on the different carriers and what quotes, they want to accept.
So the policies through Goosehead, because I've seen this in the past, but the policies through Goosehead when it comes to insurance, the buyers on the policy is the investor on the policy.
He's listed as additional insured. So the investor will hold a lien on the property as well as the underlying mortgage. So the mortgagee will be added on that policy, and then our investor will be on there as additional interest or insured, just depending on how the carrier wants it written up. But your buyers will have full access to the carrier, so they can call. The team that we work with, there's about 6 or 7 of them. They can call that team directly and they'll help them get started. They have contractors that they work with. They can get out there right away. So it's over the last 2.5 years, we've really worked hard to make that process safe, easy, and just reliable for your buyers in the event of a claim. So we also take care of paying for the appraisal. We do all of that. If there's an existing survey, we really ask that you guys can get that for us. Right now, surveyors are sometimes taking up to a month to get surveys in. We typically don't require one. Our lenders typically don't require a survey, but sometimes it's written in the check that it's required by the buyer to purchase. So if you can get an existing one, it does save your buyer a few $100s. If you can't, we understand, but we can order one. But for the most part, we usually don't need them. So if there's an existing one, it's helpful if in the event we do, and also it can help them on those title fees. Explain a little bit about our agency Goosehead, and if you guys are familiar with any of them, I know there's a lot, but it's Tom Stinson and his team. They're out in the Woodlands, and he's always available. So if you guys have questions or your buyers have questions about the quotes or the policies in general, you can always pick up the phone. They're very, very easy to get a hold of, and they're bilingual. So if you have buyers that speak different languages, they can help them as well. Underwriting for the buyers. So a separate real estate sales contract will be executed between the owner finance company and your buyer. So that original contract that gets transferred to either us or our investor. And so during the RMLO process, before we open file with them, we have a real estate sales contract that we sign with your buyer, and that will mimic our terms. So it'll be the 15% down, it'll show their purchase price, it'll show their loan amount, and then it'll also have their promissory note with their principal and interest payments. It's about like a 20-page document. Everything that we send to your buyers, you guys will be CC'd on all correspondence, whether it's DocuSign or it's email, so that if they have questions, you guys have those documents. And if you have questions before you talk to them, we're always available to answer those as well. So there will be a separate contract that they sign with us. in addition to their deeds and their closing documents. And that's what we submit to our RMLO to get started on the process. So when they do sign that contract, once it's executed, we do take a second $5,000 deposit. If they'd like, they can do the full $10,000 deposit in the beginning to avoid bank fees if they're doing wires and such. Or they can do the 5,000, but it's like a week after. So once we get their initial 5, they're signing this new real estate sales contract with us about a week later. So if they want to go ahead and just do 2 at once, that's fine. If not, there will be 2 deposits that we take. And all of these funds will be shown in their cash to close as a credit. So by the time they close, they should have $10,000 plus any earnest money they put down as a deposit going towards their cash to close. So they'll get a loan estimate in the beginning from our MLO showing probably the 5, and then when their closing disclosure comes out before closing, it'll show the full 10 plus the earnest money and any option fees.
So the RMLO, we can just go in a little bit more detail about exactly what they are. So again, RMLO is a residential mortgage loan originator. We use Texas Pride Lending out of Dallas. And basically what their whole entire purpose is to gather as much information as they can from the client to put together a qualifying mortgage and then submit that package to us to say, hey, this is the due diligence on the buyer. They make a recommendation to us on the file, whether or not they think it's a strong buyer and we should move forward or not. So they will ask your clients, you know, they'll run their credit, they'll ask them for any additional documents, tax returns, all of that. Our clients just need to provide what they have. If they don't have something, they just need to let them know, you know, I don't have this, and submit the items that they do have. So that's basically what the RMLO's purpose is just to gather as much information as they can and make a recommendation of the file to us as a company. We do have to use them to stay compliant with the state of Texas. Once we pre-approve our buyers, again, we are going to move forward. We do just have to go through this part of the process. It's also really great. Another thing that they're going to do is provide your buyers with all loan disclosures like required by the state of Texas. So it's good as well because we try to mimic the traditional loan process as much as possible for your buyers. It just, you know, creates a sense of credibility for us and for your buyers as well. So they'll receive a loan estimate in the very beginning, the same as traditional, you know, companies provide. Throughout the process, they'll require documents, same as traditional companies do, and then they'll also receive a preliminary CD, closing disclosure. We'll request that, and then a final closing disclosure as well. And it will look the same as, you know, closing disclosures that you receive from any traditional lender. So that's also really great as well. But basically, once we receive that real estate sales contract, we will, and that happens in the first week, typically of the file starting. We'll open file with Texas Pride Lending. They will start reaching out to the buyers to request the additional documentation and compliance documents. Again, we send out emails along the entire process. So when we send the real estate sales contract, we'll send one to your buyers, to you guys saying like, hey, your contract's been received. We're now opening file with Texas Pride Lending. We send something letting them know, look, they're just asking for documents. If you don't have items, just let them know. So all of that will be communicated in emails for your buyers. And then the first thing they'll get sent is the loan estimate. Just a few things to note, that their credit will not affect their ability to qualify with us, even though they will be running their credit. They are going to look for the DTI, so they may ask for a co-borrower or, you know, someone additional to put on the loan. That doesn't mean that person has to be on the deeds when we close, but they may just do that for purposes of trying to, you know, make it be a strong recommendation to us. And then all deposits, credits, earnest money, anything that the buyers have put down will go toward their cash to close, and it will be itemized on their loan estimates and their closing disclosures. So they will be able to see that everything that they have put down, all money that they put down, itemized on there for them.
So here's where they get their final. So when we get our final closing disclosure on the back end, so either us or our investor, we get our final disclosure. Sometimes we have 3 days if we're going through traditional lending, and sometimes it happens very fast. Like we get our HUD the day of closing or the day before if we're going through the private funds. So that 3 business days isn't always 3. But we do have to have as soon as we do have that, we submit the numbers to Texas Pride Lending and we start balancing. Your buyers will pay for all of the title fees and any associated fees on the first closing, except for the loan origination, which is a huge chunk. So our investors or the owner finance company, depending on who takes the deal, takes care of the loan origination. So everything in section A is taken care of, and then your buyers will take care of the rest. Since we don't get those numbers till 3 days before, or sometimes the day of, your buyers sometimes will have to deposit their funds based off of their preliminary CD, which will be as close as possible. And if there's an overage or a shortage, we'll settle that at closing. So that 3 days is sometimes not what happens, just so that you guys, it depends on the lender. And we'll give you guys a heads up on that as well. We'll keep you guys in the loop on, when they'll get their preliminary CD. So that which I think Valerie already said, it will include their seller credits if applicable, any deposit credits, all of our terms of our loan. It'll state, there's no prepayment penalties. It'll have their down payment amount, their loan amount. They'll get their estimated taxes, insurance, and their monthly payment and final cash to close will all be on their closing CD. And we'll need their funds 48 hours before the investor closes. So those will need to clear. So when we're getting close to closing, things do happen pretty quickly. But we try to keep you guys in the loop, the buyers prepared every step of the way. We're sending emails and letting them know what's going on. Once we get the appraisal, usually we can close pretty quickly after that on the private lending side. So just a heads up for you guys that, just to be prepared, it could be 1 day instead of 3 days in some cases. They can do their closing funds through a wire. They can also do cash. If they do cash, we do a 1% fee, and they need to deposit that like weekly moving up to their close date. We won't take just like a huge lump sum of cash. And they can also do a cashier's check if they'd like. We also use a loan servicer out of San Antonio. Their name is SecureNet, and the loan servicer will be sending them their first payment letter, a welcome package, just like any other loan servicer would. Their mortgage statements will come from SecureNet. If they want to do additional payments towards their principal, they can contact SecureNet at any time. If they want, if they do their escrow analysis, their loan servicer mirrors exactly what a traditional loan servicer would do. They also report to 2 of the main credit bureaus, which is really helpful to some of our buyers who are working on their credit. Some of them, are looking to refinance in a couple of years, and those 2 years of payments on time really is helpful for them. They can opt out of having their information submitted to the credit bureau, but a lot of our buyers see it as a benefit. So they also do report to the credit bureaus, just to let you guys know. And all that paperwork is filled out at closing. So there will be 3 closings that take place. The first one is the investor, which is either our investor or us at the title company. That's where the sellers get paid, the realtors get paid, and all the funds are dispersed. The very next day, if we're the investor on the property, the very next day we sell it to your buyer. If it's an investor that's involved, he sells the property to us the same day. So we stay in the middle of the transaction regardless. And then the following day, we sell it to your end buyer. Your end buyer will get the keys the day that we close. As soon as all the funds are dispersed and cleared and it's funded, your buyers they've already given us their closing fees, so they can have their keys and then the next day come in and sign all their closing documents. Sometimes our buyers will, our investors or us will close on a Friday. And so that moves the end buyers, your clients' close date to a Monday. And so if they want to move in over the weekend or whatever the case, as long as their funds have cleared, they can have the keys. Everyone gets paid at the first closing. So really it's just paperwork. And you guys are more than welcome. We encourage our realtors to attend the closings with our buyers. It's usually a really exciting time for them, and you guys have been with them through the whole process. And I think it also makes them feel comfortable having you guys there. So we always welcome y'all to come to the closing that we have, but it's not mandatory. We will take care of them.
So just a little bit of information for you guys. We do have a realtor information packet that we'll send in the beginning of the process for new realtors that we work with, just to remind you guys of some of these things and make sure that you guys are all aware. Since all of these are investment loans that we're obtaining, the max seller contribution is 2%. If you're working with a seller, you're working with investors that are wanting to do more than that, you have ways of getting creative, but for purposes of the contract, it's a 2% max seller contribution. We talked a little bit about new builds already. We do those as well, no issues there. If your buyer is gonna work with a new build, we can usually set up ahead of time who that investor is gonna be to go ahead and get them directly on the contracts to avoid having to change any of that. For our lenders, all contracts do require a minimum of 30 days. Sometimes our private funds can go a little bit quicker, just depending on appraisal turnaround times, but our lenders do ask for a minimum of 30 days on all the contracts. The buyer closings take place at our office with our closing attorney and notary. That's at our office in Stafford, Sugar Land area. So we will send out closing instructions, emails and everything to your buyers that have, address, instructions, what to bring to closing, all of that. So they'll know exactly where they need to go, but that will take place at our office in Stafford. Again, our general home criteria is purchase price 200 to 350,000. Anything below that down to 150 we can do, and we do not have a cap above. Buyers.
I was just gonna say, for the promotions, when I showed you when we do the 10% down, that will be only for purchase prices in that general criteria.
Yeah.
As well.
Not above. The buyer's funds must be received 48 hours prior to the first closing. And we do not lend on commercial properties, raw land, or mobile manufactured homes at this time. Hopefully later this year, we'll be getting more into the commercial, but at this time we don't. One thing that we have had a couple of issues with, since we do purchase homes all over the state of Texas, we do a lot of rural areas, and we've had it happen out in like Conroe and Cleveland area where it was the property that had like a big, huge garage also on it or something like that. And we can move forward doing those properties, but the problem can happen just if the appraiser comes back and says, no, we deem this as commercial and best use for commercial. If that happens, we're not going to be able to move forward on the property. So kind of just something, if you have a property like that, we can submit it to our lender ahead of time and just get their opinion and say like, hey, what do you think about this property? Do you think we can move forward with it being residential? And we can do that. So just let us know if you have that. But that is one issue that we've kind of run into on a few properties out in some of those rural areas, just being mixed use. But at this time, we don't loan on commercial properties. We do also have a $1,000 referral fee. So we do not pay the referral fee to realtors receiving commission on the deal. But like for brokers, it's great because, anybody in your brokerage firm, we would pay the $1,000 referral fee to brokers, or if you have any other realtors that you let know about our program, we pay a $1,000 referral fee at closing, at the buyer and buyer's closing.
So
that is fun.
just so I'm clear, the realtor that's representing the buyer is not eligible for the.
Correct, because they get their full commission.
Yeah, they're receiving full commission on the deal.
Okay.
So it would go to their broker or whoever referred them to us.
But it could go to their broker.
Yes. So for brokers, it's a great program because if all your realtors are using our program, every time they close a deal, you get $1,000.
Yeah, and then we do have an investor side as well. We don't discuss that in here, but a lot of our realtors work with investors, so we do have a side of that program. If you guys want more information on that, just let us know.
Yeah,
We do.
I would be interested in more information. I'm pretty sure all of them would be interested.
Okay. Okay, great. Yeah, we can.
send that out to
Yeah,
you
we
guys.
can send that over to you guys. We do also pay a $1,000 referral fee for investors as well. So on both sides of it, but yeah, we definitely can send more info about our investor side, which is basically how we obtain most of the properties.
Right, absolutely.
This is just our contact information. We do have a Spanish speaking representative. Her name is Sydney. Her contact info is there, and I will send this out to, if you have a list of everyone who's on the Zoom, I can send this presentation out to them as well, so they have all of this. But she would be the one to contact. That's our office number. for any Spanish, she'll walk them through the entire process. She also will be able to translate the documents that they sign into Spanish, as well as our RMLO. They also work with a lot of Spanish speaking buyers and can translate and give them all their disclosures in their specific language. It's actually a requirement by the state. So that is something that that Sydney helps us with. Our website is theownerfinancecompany.com, as well as all our social media. So if you're looking just to learn more about us, to follow our events, or to see some of our closings, or what our clients are saying, at The Owner Finance Company is where you can find us on all of our social media outlets. And that's our address. We're located in Stafford. It's right at the cusp of Sugarland, Stafford, up 59 and Corporate Drive. So pretty easy to get to for most people. It's not real hard. It's right off the highway. Info at theownerfinancecompany.com if you guys just have general questions, and then all of our emails at Sydney, Jen, or Valerie at theownerfinancecompany.com. Really simple to find us.
Sydney is our transaction coordinator, so she typically handles everything with all the incoming applications, new buyers. If new buyers have questions, she handles all of that. So she's kind of the best person to contact for anything having to do with brand new clients, or when you're very first starting out, getting your clients, started with the program. And then she helps throughout the entire part of the process as well. So.
And that pretty much concludes. I know it's a lot of information. So if you guys have any questions now or moving forward, you can definitely email us, ask us right now, and we'll be sharing this presentation. So sure.
Do your investors have like any issues with like appraisals, like if the appraisal comes back like low?
Yeah, so if appraisals come back low, the buyer is required to bring the difference. Our lenders will only lend on the appraised value. So, I mean, that is an issue that we've seen as the market's kind of been unsteady. We actually see it correcting itself a little bit. Sellers for a full month and a half or 2 months were way overpriced, and they've had to do amendments and come down on the purchase price, because it's not the lender, it's the appraiser that's going out there. And if they don't have comps to support those purchase prices, then that just becomes a negotiation. So yes, your buyers will have to bring the difference, or you guys can go back and negotiate for the purchase price to be lowered.
I have a question. I know one component of Ribbon, you wouldn't need it because you all have your own funding. But Ribbon provides, they call it appraisal protection, where they would come in and cover that gap on behalf of the buyer. I don't know if y'all are familiar with
Not
it.
familiar with Ribbon.
All right, y'all familiar with Ribbon Homes?
No.
You're not familiar with Ribbon Homes?
No. So is it a builder?
No, it's I don't even really know what category. But what they do is it's kind of like insurance for the buyer.
Okay.
Right? So to make their offers more competitive in the market, the buyer goes through them, they get approved through them, and what Ribbon will say is we'll guarantee your close date. So if on that date you can't close, they will come in and we'll close on your behalf. That's one of the services. Another service is also, if it doesn't appraise, then we'll cut a check for the gap and again ensure to close it. So that's like some insurance for the seller to give them more reason to be like, oh yeah, let's accept that offer over these other offers.
Red Door does something similar to that we actually had on a property where it was like, if we weren't gonna meet the close dates, then they came in and purchased it. Yeah.
So I was just curious, it may be, clearly I haven't never had to utilize it, but it is something that we are utilizing that's in the market right now.
Okay.
And when it comes to that appraisal piece, maybe it added. So I guess you're not familiar, but it's not saying that you wouldn't let it happen.
Yeah, we're extremely creative with our financing. It's us two and one other partner, and he's been in the business for over 25, 30 years. And so if you have a very unique situation, definitely don't hesitate to bring it to us, and we will get creative.
Well, one of the things that I encourage my agents is that any buyer that they get, I encourage them to go through the Ribbon approval process, whether they use it or not. Go through it, because if you need to, you can tap into it. Because they do charge, like you have to pay an extra one, like you're paying 1% for the service. You don't have to use them, you still pay 1%. But if you do have to use them, they have to come in on your behalf, then it's 2%. So that's how they refund themselves.
I think the only thing with that, which we if we have a buyer, you guys have a client that wants to do that and use that, like, we don't have any issues with that. I think we would just have to make sure there were no issues since we're assigning the contract. So basically, like, would whatever your client is signing with them, would that assign to our investor as well along with the contract? So as long as there weren't any issues there, like, yeah, absolutely, any products that your buyers want to use or anything that your buyers want to do, especially, to protect themselves from something like that, we're perfectly fine with,
Alright.
just as long as, that company, however we had to work it out to make sure that they were still covered with the contract being signed.
Gotcha.
Yeah.
That makes sense. Alright. What other questions? Any questions online? Alright, I don't know, I know I came in late, but I don't know, I'm curious to get you all's story as far as how long you've been working with, the owner finance company and what it's all, I don't know if you did all that already.
No, I don't know. We didn't really give a background. We started the company in November of 2019. So we were going into COVID in 2020. We had no idea what we were going into. It ended up bringing a lot of opportunity our way. A lot of buyers who were in the loan process and qualified, lost their job, got on forbearance, got their credit repulled, and all of a sudden, their strict underwriting process, their deal fell through. So we were able to save quite a few deals for a lot of people. So our first year, we ended up, closing 42 deals, and it was a really, really prosperous year for us. We learned a lot, and we're still learning every day about new ways that we can bring options, not just for your buyers, but also, for our company and for our investors. We created the company so that it's a win-win-win for everyone, which is why in the beginning, I don't think you were here, but we don't raise the purchase price for the buyers. Anything that you guys negotiate on the contract is what we follow through all the way with. They get the deed the day they close, so they're homeowners when they leave our office, and that's recorded within 30 days. Before that, Valerie and I's history is oil and gas. We were in another market that was kind of up and down. So adjusting to some of the changes over the last few years has been it's been a fun challenge and a learning experience. And so as we move forward, we're looking forward to, like I said in the very beginning, I'm not sure if you're here either. We're working on a lot of creative financing to maybe get these deals closed in as little as 10 days. So we have
And minimize on top of that, like really minimize costs for our end buyers, because right now we do everything we can to minimize that cost by making, our investors pay loan origination and those fees associated. But anywhere that we can save, we want to be able to do that for the end buyers, not raise closing costs, not raise any of that. So continue to have no prepayment penalties and all of those things. So not raise interest rates any higher than they already are. If we could have any type of control over that, we'd like to. So yeah, that's, now that we're 2.5 years old, that's, as a company, something that, we have enough credibility now to be able to go to banks, and we're working on some just, different financing for the company, funding for the company.
Mark, Gara, Valerie, and myself, we're all three co-founders.
Okay.
Yeah.
And oil and gas to real estate, that's kind of my story. I was started out in oil and gas.
Oh,
too.
really?
Yeah.
What were you doing?
Petroleum engineer.
Oh, yeah.
Yeah, my degree is in chemical engineering.
You were exactly who we talked to.
Yeah.
Yeah.
We would go from, rigs and FRCs to your office in a skirt, changing in the car.
Yeah.
It was a crazy market, and her and I, when we met, we kind of teamed up. Everybody was traveling and, losing their jobs, and we ended up having to take over Texas, Louisiana, Colorado,
All
all the states. And so we joined forces, and, there was no service driving to Midland, and she started reading me books about real estate. We always kind of had a passion for it, but we had never done anything in real estate until we met our other partner, Mark, and we started attending real estate events and just learning every single thing we could. And our partner now came to us and just said, "Hey, I have this idea. I'm tired of being a landlord. I want passive residual income. I want it to be a win-win situation. Like, I need some help bringing it to life. Like, what do you guys think of this concept?" And so,
a few months later, the owner finance
the
company.
owner finance family, finance family,
Yeah.
finance company was created.
It's really
Wow.
Yeah.
So we're looking forward to some really big things this year and in the upcoming years. As she mentioned, we want to get into some of the commercial space and
Expanding.
Found it. As well.
Oh,
so
wow.
Divvy, they basically, you rent the home for like, it could be 2 years, 3 years, however many years. And all of that rent is going into the house's equity.
Yeah,
And then like.
you have the option.
Then you have the option to purchase it.
Okay,
Yeah, so one more time. I mean,
that's
that
awesome.
company as well, yeah.
Yeah, that's an awesome concept as well.
It is. It
Yeah.
is.
I guess it proves that y'all are smarter than us.
Yeah.
No,
Well, we're always looking to educate as many realtors as possible. A lot of people don't know that there's alternative financing. So I mean, when you run into those clients that, just like, hey, I have $300,000 cash, can you help me? Like most
Or even
realtors are gonna say
$50,000
no, like,
cash,
I
you know?
can't help you.
Right.
If you want to get a loan, no, I'm sorry. And so our goal right now is, as we're expanding the company and hiring more people, is to just be able to educate as many realtors across the state of Texas
Yeah.
and further as we can. So we appreciate that you guys allow us to come in and,
No, absolutely.
extend
Yeah.
it into your Zoom, like
Yeah.
really
Well, no,
do
we-
appreciate the opportunity.
We're big on, and if anybody has any questions, just chime in. But we're real big in having relationships when it comes to these different resources that are out in the market, right? So we're constantly bringing in new agents, and we're constantly turning things over. And they may not have somebody right now, but when that moment hits, when it's a perfect fit,
Yeah.
we need them to quickly be able to
Have a resource available.
and
Yeah.
remember that they have the resource, right?
Yeah.
So, for us, we don't want this just to be a one-off, right? So
Right.
we want you to get into our private Facebook group. We want you to
Absolutely.
engage on a regular, we'll make sure that we put you in a position where you can engage on a regular basis with our brokerage
Awesome.
firm.
We
So
would love that.
they keep you top of mind. So when that moment hits, they know, hey, let's go to Valerie and Jen. That's
Yeah.
what we need right now.
So every
That's awesome.
week, so we're part of hundreds of groups right now on Facebook, and every single week, we're posting something to
Sweet.
keep you guys in the loop, like whether it be a promotion or just education about our program. So we would love to be a part of your group.
Yeah.
You want to
We'll
send an
make that
invite
happen.
over,
Like Shay's gonna make sure that we get you
Okay,
the invite. and
perfect.
get you
Yeah,
that.
we would
Yeah.
love that.
and we can just stay connected. We also are always, open to sponsorship. So if you guys, have something that an event or something that you would like for us to attend and
Yeah.
say a few words at and sponsor,
Okay,
anything that we can do to help you guys close more deals,
Yeah.
helps us close more deals. So,
absolutely, yeah.
we look forward to partnerships like this.
All right,
We
we'll do that, cause
Also, yeah, we also just really recently got our presentation approved for CE
oh, sweet.
credit, so we're gonna be holding
Do you have a providership
those
already?
as well.
Cause you have to have a providership.
Yeah, we do.
Yes, we
Yeah,
do.
we do, through our
Yes.
insurance company, or Goosehead,
Cause
yeah.
we have
yeah.
one as well, just in case y'all.
Okay,
Okay.
awesome, well, good to know, just in
Yeah.
case, but yeah, so we'll be setting up later this year, like, once we get all of that, rolling, we'll be setting up for CE courses as well.
That's
for you
perfect.
guys to
Yeah.
attend.
We are also having a Realtor and Broker Appreciation and Educational event, June the 1st. It's gonna be at Federal American Grill at the Headwood Village location.
Sweet, yeah.
So I wanna make sure I have everybody's cards and contacts so we can add you to our subscriber list, and we'll be sending out that invite, either tomorrow or on Monday.
Okay. Well, what we'll do, Shay, she's documented everybody that's on Zoom
Awesome.
Okay.
and add people that are in here on there. So she's shaking her head like.
She's like,
Okay,
I already
she's
got
on top of
it.
it since
She
we
already
walked in
knows
the
what to
door.
do, yeah, she has it.
She's
She's
like,
been on
why
top
are
of it
we
since
having
we
this
walked in.
conversation? Yeah, so we'll get all of that information to you. We'll get you in the private Facebook group. We do have, it's still kind of in the planning stages. That's something else that Super Shay is working on. It's like a family reunion type of thing that's gonna be around June, maybe mid to late June. That may be an opportunity for y'all to come back.
Okay,
Great,
Sponsor or whatever.
yeah,
So we'll get you information about that as well.
awesome.
great.
I have a quick question.
Go ahead, Vern.
Okay, I just wanted to make sure. So y'all did say that y'all take referral investment companies. You can refer investment companies. Can I do we use your information that was on the screen?
So yeah, you can just use our information on the screen, Valerie or Jen, at theownerfinancecompany.com. And really it's for investors. It's usually private investors. But yes, anything on the investment side, if you have referrals or something that, you know, you'd like to connect us with, yes, we would love to get that information, and be great if it would be someone that can move forward on the investing side.
I mean, some of our realtors have even become
Yeah,
some of our,
oh,
a
yeah.
lot of our engineers have become our investors, and
Yeah.
also a lot of realtors who start to see the process. So yeah, we're always happy to share that,
Look,
our investor
I'm
information.
very interested. in
The investor side.
side of it.
Yeah.
So definitely send that to me.
I will.
We will.
Great, thank you.
You're
Thank
welcome.
you.
Thank you. Okay.
Anything else?
Any other questions?
Can you put their information back on the screen, please?
I'll send it.
Great, thank you.
Contact information as well.
Well, y'all finna miss some good grub.
Mhm.
That means there's more for us, and we appreciate you not coming, I guess. We definitely appreciate it, Jen, Valerie, appreciate you guys coming and exposing us to, sounds like a great program, great resource for a lot of some of the ills that we're dealing with right now in the marketplace. It helps us get more people, more buyers in the home, so we appreciate your creativity, putting the company together, and
Thank you very
Yeah,
much.
thank you for having us. We appreciate the invite.
absolutely.
Bye, guys. Thanks
Bye.
for
All
joining.
right, see y'all later.
Bye, thank you.
Awesome.
That was fun.
Yeah, that was
We
great.
enjoyed
So we're
that.
easy, yeah, we're easy.
Yeah, very easy.
Y'all have